Right now, something strange is happening in the market and almost nobody is talking about it. Headlines say Warren Buffett dumped nearly $89 billion in stocks, and the timing is not random. While everyone is staring at tech charts, something else is quietly lining up behind the scenes. If you blink, you might miss the biggest signal of this decade. Because this is not just about selling stocks, it is about what comes next. And the clue is hiding in plain sight. Silver. Not the shiny metal you see in jewelry stores, but the one the world is running out of. Stay with me, because by the end of this video, you may never look at silver the same way again. Welcome back to the Gray Ledger, where we track the moves smart money never explains on TV. Now before we go deeper, take 1 second to like this video and subscribe to the channel. It helps this video reach more people who want the truth, not the noise. Alright, let's slow this down and set the stage. Warren Buffett is famous for one thing above all else: patience. He does not panic sell, he does not chase hype. So when filings show massive stock reductions, investors pay attention. Over the last few quarters, Berkshire Hathaway has been quietly reducing exposure, not just trimming, but cutting tens of billions in equity positions. Apple, banks, and other core holdings saw major reductions. This shocked people because Buffett loves quality businesses. So why now? The official explanation sounds boring: rebalancing, cash management, risk control. But history tells us Buffett never moves this big without a reason. When he stockpiles cash, something usually breaks, or something massive is about to reset. Right now, Berkshire is sitting on a mountain of cash and short-term treasuries, more than at almost any point in its history. That alone should make you pause. Because cash is not trash when uncertainty is rising. But here is where things get interesting. While Buffett himself is not publicly buying silver, the conditions he prepares for often ignite silver rallies, and those conditions are lining up fast. Silver is not just a precious metal, it is an industrial necessity. Solar panels, electric vehicles, military tech, AI data centers, medical equipment. Silver is everywhere, and demand keeps rising. But supply is not. Most silver is mined as a byproduct. That means higher demand does not instantly create more supply, and inventories are shrinking quietly. Now layer this with global debt, currency stress, and geopolitical tension. This is the exact environment where silver historically explodes. In past cycles, silver lagged first. Then it moved violently, sometimes 5 times faster than gold. Some analysts are whispering a $150 silver scenario. Not tomorrow, but in a supply shock, in a monetary reset, in a panic for real assets. Buffett understands cycles better than almost anyone alive. When he moves to safety, smart money starts scanning for asymmetric bets. Silver is one of the smallest, tightest markets on Earth. It does not take much capital to move it. That is why when it runs hard. And here's the psychological twist. Retail investors are still bored with silver. That is usually when the setup is perfect. In part 2, we are going to break down the exact catalyst that could flip the switch, the one most people are completely ignoring right now, and why this moment feels eerily similar to past silver breakouts. Stay with the Gray Ledger, because this story is just getting started. Something powerful is building under the surface, and it does not make headlines yet. Most people think silver moves because of inflation headlines or gold prices, but that is only the surface story. The real driver is something far more structural. It starts with energy. The world is pushing aggressively toward electrification. Solar power is no longer optional, it is mandatory policy. Every solar panel needs silver, not a little, a lot. And unlike oil or gas, silver cannot be substituted easily. At the same time, electric vehicles are scaling faster than expected. Each EV uses more silver than a traditional car. Charging infrastructure uses even more. Now add AI data centers. These facilities are exploding in number. They require massive electrical efficiency. Silver is critical there too. Here's the problem. Global silver production has been flat for years. In some regions, it is actually declining. New mines take over a decade to develop. Environmental rules are tighter, costs are higher. And remember, most silver comes from other metal mines. If copper or zinc slows, silver supply drops with it. This creates a silent squeeze. Demand rises steadily. Supply struggles to keep up. Above-ground inventories are being drained. Vaults look full on paper, but much of that silver is already spoken for. Long-term contracts, industrial use, strategic reserves. The tradable silver pool is far smaller than people think. This is where the catalyst comes in. Interest rates. For years, high rates kept pressure on metals. Cash finally paid something, but that phase is cracking. Debt levels are becoming unmanageable. Governments cannot afford high rates for long. The moment rate cuts become inevitable, metals reprice fast. Silver reacts violently to falling real rates. Now add currency risk. The dollar looks strong, but cracks are forming globally. Emerging markets are already hedging. Central banks are buying hard assets again, not just gold. Silver is starting to creep back into discussions, quietly, behind closed doors. This is exactly how past runs started. No hype, no headlines, just positioning. Remember 2010, silver sat ignored for years. Then in less than 12 months, it went parabolic. Most people noticed at $40. By then, it was already too late. What about the $150 talk? That number sounds crazy until you adjust for inflation. Until you factor in industrial demand that did not exist before. Until you realize the silver market today is tighter than ever, it would not require mass adoption. It would require panic at the margin. One large industrial buyer, one delivery failure, one confidence break in paper silver, that is all it takes. Buffett has always said he looks for scenarios where risk is limited and upside is enormous. Silver fits that profile better than almost anything right now. Limited downside relative to history, massive upside if the squeeze snaps. And here is the irony. Most financial media still treats silver as a relic, something boring, something outdated. That is exactly why smart money watches it. In part 3, we will connect this directly to market psychology, why retail is always late, why institutions move first, and how moments like this quietly change everything. Stay with the gray ledger, because the most important part of this story is still ahead. There's a pattern that repeats in every major market move, and it always starts the same way. Nothing happens. Prices drift, interest fades, people move on to something more exciting. This is the boredom phase. Smart money loves this phase, because while retail investors need action, institutions need positioning. They buy when nobody cares, they wait while nothing happens, and they exit when everyone is talking. Silver is deep in that boredom zone right now. Search trends are low, mainstream coverage is almost non-existent. That is not bearish, that is bullish. Retail investors usually enter silver after it has already doubled. That is when emotions kick in. Fear of missing out replaces logic, but institutions do not operate on emotion, they operate on probability. Right now, the probability setup is quietly improving. Look at futures positioning. Commercial hedgers are reducing shorts. Large speculators are still cautious. That imbalance matters. It shows risk is shifting. Now think about psychology. Most investors were burned by silver in the past. They remember the crash after 2011. That memory creates hesitation. That hesitation delays participation. And delay creates opportunity. Markets move when disbelief turns into urgency. Silver does not need belief yet. It just needs pressure. Industrial demand keeps applying that pressure every quarter. At the same time, paper silver markets are stretched thin. There is far more silver traded on paper than exists physically. As long as confidence holds, the system works. But confidence is fragile. It always is. A single delivery issue can ripple outward. A single mismatch between promises and reality. That is when paper collapses into physical demand. That is when prices gap higher. Not gradually, suddenly. This is why silver moves scare people. It does not climb, it jumps. Institutions know this. They do not chase the jump, they prepare for it. This is also why Buffett-style thinking matters here. He is not trading silver, he is preparing for instability. He reduces exposure when markets are fragile. Others look for protection. Some choose cash, some choose hard assets, some choose asymmetric plays. Silver sits at the intersection of all three. It is liquid, it is tangible, and it is mispriced relative to risk. That is a rare combination. Now zoom out. The average investor today is exhausted. High inflation, market volatility, conflicting narratives. That exhaustion leads to apathy. Apathy is fertile ground for big moves. Because when people stop watching, pressure builds unseen. Then one day, a headline hits. Silver breaks a key level, volume explodes. Suddenly, everyone asks the same question. Why did this move so fast? The answer is always the same. It was moving long before anyone noticed. In part 4, we will bring this all together. What to watch, what signals matter, and how moments like this usually end. Stay with the gray ledger, because this final part ties everything into one clear picture. Now let's pull everything together, because this is where the picture becomes clear. When big money moves, it rarely announces itself. It leaves clues. Rising cash positions, lower risk exposure, quiet shifts away from crowded trades. That is what we are seeing now. Warren Buffett selling tens of billions in stocks is not a prediction of a crash tomorrow. It is a signal of caution. A signal that the easy phase is over, and when the easy phase ends, markets start rewarding preparation instead of optimism. In those moments, assets that are ignored suddenly matter again. Silver lives in that category. It is not trendy, it is not flashy, but it sits at the center of modern infrastructure. Energy, technology, defense, medicine, and unlike digital assets or financial products, silver is physical. It has weight, it has limits. You cannot print more of it. Now think about timing. Debt is high. Governments are boxed in. Rates cannot stay elevated forever. When the shift comes, it will not be gradual. Markets reprice narratives faster than fundamentals. Silver has a long history of lagging and then catching up violently. That is not a theory. It is a pattern. The $150 number is not a promise. It is a possibility under stress, under a squeeze, under a loss of confidence in paper systems. And confidence is the most fragile asset of all. Once it cracks, it does not heal slowly, it snaps. This is why moments like this matter, not because of hype, but because of alignment. Industrial demand, tight supply, monetary uncertainty, investor apathy. Those ingredients do not show up often together. When they do, outcomes tend to surprise people. Most viewers will hear this and do nothing. That is normal. Most people always do nothing until price forces them to act. But a few will pay attention. They will watch inventories. They will watch rates. They will watch how silver behaves when fear returns. Those people are rarely shocked. Everyone else is. This channel exists for that reason. The Gray Ledger is not about telling you what to buy. It is about showing you what others are quietly preparing for. If this story made you think differently, now is a great time to drop a comment below. Tell me what you think about silver from here. Do you see it as outdated or dangerously underestimated? And if you know someone who only watches headlines and ignores signals, share this video with them. Sometimes one conversation changes how people see risk forever. Thanks for watching. And I'll see you in the next entry of the Gray Ledger.